Thank you, Mr. President. I wish to thank you for convening this important gathering. Before I begin, I would like to note that due to time constraints, I will read only part of Israel's statement today. However, the full text of my remarks is being distributed in printed form. Today, the world faces an economic crisis unparalleled since the Great Depression. The current economic downturn is not constrained by national borders or archaic notions of geography. This crisis is global in nature and affects us all, rich countries and poor ones, developed nations and developing ones. As such, the crisis requires a global response, common and coordinated action that builds upon cooperation among all nations. In addition to reviving the global economy and implementing required reforms, we must pay special attention to the adverse impact of the economic crisis on developing countries. The global economic crisis threatens to erode and reverse the progress made on the internationally agreed development goals, particularly the Millennium Development Goals. The crisis, if unchecked, can undermine the reduction in global poverty rates and would slow the gains made in economic growth in developing countries. Education, health, and social stability are all at risk of severe deterioration, with women and children bearing the brunt of such harmful trends. Therefore, we must confront these concerns before they become exacerbated. With its vast network of agencies dealing with development issues, the United Nations is the most suitable entity through which to address the impact of this economic crisis on developing countries. Mr. President, the required global response to the crisis reflects numerous dimensions of this crisis as discussed in the outcome draft documents, as well as by other speakers. Let me elaborate on a few of the essential principles of any such response. Coordination. There must be increased coordination among countries' responses to the crisis. Additional cooperation and exchange of information is highly desirable and would enhance the effectiveness and consistency of our actions. However, decisions and actions should be taken within the existing international financial institutions. The IMF has been active in promoting such coordination, and continued effort in this regard should be encouraged. Counter-cyclical fiscal stimulus. Such a stimulus is desirable whenever possible. However, its scale and nature must be tailored to the specific circumstances of each country and its ability to pursue a policy of fiscal expansion given its overall fiscal situation and the need to maintain macroeconomic stability. Preserving international trade. The collapse of trade has served as a major catalyst of the that transmitted the effects of the crisis from large advanced economies to many smaller economies that were initially at the periphery of the financial crisis. As such, it is most important that countries do not enact protectionist legislation. The allowances recently made for trade finances at the G20 are very welcome in that respect. It is also important that countries do not design their stimulus plans in a way that are counterproductive to world trade. Improved financial regulation, including better international harmonization of accounting standards. The crisis highlighted major deficiencies in the financial regulation and supervision, and lessons that have been learned need to be implemented worldwide in a concerted and coordinated manner. Improving the functioning of the existing international financial institutions and their representativeness. Various countries and the world economic system as a whole have benefited enormously from the functioning of the IMF and the World Bank. Their independence and professional authority must be preserved and should not be compromised. However, the responsiveness and representative nature of these institutions may be improved with greater flexibility to extend their assistance to recipient countries as needed. Indeed, We welcome that these institutions have already made important modifications in this regard. We should focus on improving the functionality of the current institutions so that they benefit all their members, rather than seek the creation of alternative institutions. With these principles in mind, let me now turn to a brief review of the Israeli experience thus far in responding to the economic crisis. Israel is a small, open, export-oriented economy, highly integrated into the global economy and financial markets. Hence, the results of the global crisis on the domestic economy have been substantial since the latter part of 2008. Monetary policy in Israel has responded swiftly to the deterioration on the world economy since September 2008. The Bank of Israel cut its key rate dramatically in several successive steps to its current lowest ever level of 0.5 percentage points. These cuts were augmented by additional steps to increase liquidity in the markets and lower market rates. Viewed from a global perspective, these actions resemble similar steps taken by other central banks in what can be seen as a global, even if not explicitly coordinated, monetary expansion. Increasing foreign reserves. In the last year, and for the first time in a decade in which it refrained from intervening in the foreign currency market, the Bank of Israel bought foreign currency on a regular basis. The increase in foreign reserves should enhance the resilience of the economy to shocks and reinforce its stability. Fiscal stimulus. Israel's ability to pursue a major fiscal expansion is constrained by its high debt-to-GDP ratio. Hence, the government has required to strike a balance between concerns about a significant hike in yields resulting from fiscal expansion and the desire to mitigate the effect of the crisis through expansionary fiscal policy. Consequently, the government has recently decided on a limited increase in the deficit to 6% and 5.5% of GDP, respectively, for 2009 and 2010. This decision allows the automatic stabilizers to operate through a decline in tax revenues, which have indeed fallen quite dramatically. Some increases in expenditures that are directed at dealing with the labor market and other consequences of the crisis are offset by measures to raise tax revenues so as to limit increasing the deficit. The importance of international trade. Exports are crucial to the maintenance of economic activity in Israel and its growth. Hence, the decline in world trade has been a major, though not exclusive, force in driving Israel into a recession. The decline in demand has prompted enhanced pressure from interest groups to adopt some protectionist measures, but this pressure has been resisted. Deficiencies in the financial markets and required remedies. In Israel, as elsewhere, the crisis has highlighted deficiencies in the functioning, regulation, and supervision of financial markets. Israel can and should draw upon the experience and lessons gained abroad regarding required reforms while tailoring the specific changes to the particular features of the Israeli financial markets. Drawing on these insights from the Israeli experience, the extensive crisis requires an extensive global response. The response should be coordinated in a timely and effective manner based upon a sound economic foundation. It must take into account the particular circumstances of each country. These objectives would best be served by working within the existing international financial institutions and frameworks. We should take special care to address the concerns of developing countries and to mitigate the adverse effects of the crisis on their long-term development prospects. These challenges to development policy should be the priority of the United Nations and its agencies in response to the global crisis. The many different institutions and mechanisms that have sought to minimize the impact of this crisis must